2025 is going to be a year full of change. It's going to be a year full of politics, and it's going to be a year full of market volatility. That's almost guaranteed based on what we've seen ending 2024. And so what I'm going to do for you today is I'm going to break down 3 of my favorite Canadian ETFs so that you can invest in a way that makes you feel safe, that you don't have to stress too much about, and that gives you a couple different options that I think are interesting for the Canadian market based on what I see happening in 2025. Welcome, my name is Liam, and this is Golden Larch Investing. Here we talk all about investing in Canada. Now, today's video is going to be focused specifically on ETFs because I think that's the way that most investors prefer to diversify their portfolio and is one of the easiest ways to get some portfolio building done for you. You only really have to pick one thing, and somebody else does the work of managing what investments stay in it, of choosing the allocations of certain stocks, and doing a lot of that hard work. They're also a nice low-cost way to invest. We've talked about this a couple times here on the channel. Now, today's video is going to be specifically about Canadian ETFs. So if that's not something you're interested in, check out the videos we've done previously talking about just worldwide ETFs. Let's start off. The first ETF I have on here that I want to talk about today is VFV, which is essentially the Canadian version of the Vanguard S&P 500 ETF. Now, the S&P 500, if you haven't heard of this, is the 500 biggest companies. And there's no stop there. It's not, oh, these are the 500 biggest Canadian companies. No, they're just the 500 biggest companies. But the cool thing about VFV is that it's demarcated in Canadian dollars. So you buy it and you sell it in Canadian dollars without having to have a transaction fee to purchase US dollars. Now, there's a couple advantages to that. First, having it in Canadian dollars means that you don't have to pay a fee every time you buy. But it also means that you're using Canadian dollars and you're sort of using this to hedge against the currency a little bit. Now, are there better options? Maybe if you're willing to go into US dollars, maybe, but that's kind of outside of the scope of this video. I really do think that owning the S&P 500 is probably a no-brainer. I personally do it in my publicly available portfolios and in my private portfolio, and it's just sort of the easy option. It has been just about the best benchmark. It doesn't get sort of limited by being a factor-specific benchmark or like a NASDAQ where it's really tech-focused necessarily. It just happens to be the biggest companies. And so we see companies rise and fall out of the S&P 500 all the time, and the lovely people that put that thing together do all the work of deciding who should be in it and what the allocation should be. So I think it's a must own for almost every Canadian investor. And if you're going to be somebody who wants to passively invest in 2025, you should cut the video right here because this is what you need to own. Really, in all honesty, the S&P 500 is probably the best index fund to just be passively investing into. Now, if you're a little bit more of an active investor and you have a couple of specific goals, the next 2 ETFs we're going to talk about might be very interesting to you. The next one I have on the screen here right in front of me is XEI, which is a composite high dividend ETF, and it's all Canadian companies. So what does this mean? It means that it's picking out some of the best high-paying dividend Canadian firms for you, and it spreads them out, it allocates them in a certain way. And honestly, it's pretty impressive. Again, I have some numbers here on the screen. This thing is looking at a compound annual growth rate of 8%. And what's even better, a dividend yield, a yearly payout of 4.8%. Now, that's a really high dividend yield with a really high compound annual growth rate. So if you see the stock is rising and all the basket of stocks that it owns is continuing to rise, 4 times what inflation is normally supposed to be, plus you're getting that dividend yield, that means that you're going to be able to either reinvest those yields and snowball this, right? Go for that dividend snowball effect, or you can take this, and this is the kind of person I would see that might really be interested in this, take this money, live off of it while it grows. Because next year you're going to get a higher payout, and the year after, and the year after, and the year after, as that compound growth rate, that 8% every year on average, continues to build. So if you're like looking for a fund that you're going to invest in to help you retire, right, a little extra income, or even just to retire on if you're really into the FIRE movement, you're interested in retiring off dividends, or even if you're already retired and you're like, man, I have all of these growth stocks that I'm kind of done with, and I want something that's going to be like a nice and safe-ish ETF that I could hold in like a TFSA, for example, this might be a really good option for you. Now, the next ETF I want to talk about, again on the screen here in front of me, a very specific. And this one is something I'm picking because of the political drama of 2025. And I have to put that out there because a lot of people are probably going to disagree with this pick. And I understand it is not for everyone. But it is XEG, which is the capped energy ETF, which means it is the Canadian energy market, essentially. Now, this thing has not been returning the same kinds of amazing returns as the last two. The S&P 500 offers amazing returns every year. The cap dividend ETF that we had over there was returning 8% compound annual growth rate. For this, you're looking at a compound growth rate in the 2% range. You're also looking at a dividend yield that's just under 3. So if you're just looking for their past performance, you're going to be disappointed. If you're looking at what they've done in the last 10 years, you're not going to like it. The last 5, not so much. But the last 3, you'd be really, really impressed. And that goes a little bit into why I think this might be a good option for 2025. One of the big things that's happening this year is going to be the Canadian election. Now, if you are politically involved at all, you probably know that right now, at least, going into the end of 2024, it looks like there's going to be some changes in the government. And one of the things that the markets, at the very least, are kind of expecting is that depending on what exactly happens in the Canadian government, that oil and gas are going to have a little bit of a resurgence because some environmental regulations will probably be cut back, and we might see some changes coming in the way that permits are given and a lot of other things that are sort of outside the scope of this video. The point is, the market thinks this is coming. And if the market thinks this is coming, that means that they've probably also got insiders at these companies who are planning on making investments and who see a positive future 2025 and beyond. Now, if you're somebody who's not willing to speculate that much, don't invest in this. Stick to the S&P 500. It's a smarter option. To be fair, it's a smarter option. But I think it's a really interesting choice. You have an option to buy a whole industry, to get an ETF that gets you a piece of the pie everywhere. So if maybe 1 or 2 projects go through that wouldn't have gone through otherwise, and that blows up 1 or 2 companies, you're not just trying to pick random companies and guess which one's going to be super successful. You get to own the whole sector. Just a couple ETFs that I thought might be really interesting to you. Let me know down below. Do you have any specific sector ETFs or just ETFs in general that are in Canada that you think I should be investing in? I'll leave a pinned comment down there. Please respond to that. And if you made it this far in the video, please leave a like on the video. Subscribe to the channel. It means a huge amount to me. It doesn't cost anything. And I will hopefully see you in the next one.